Chris Conway from the Australian Stock Report is joining us live from our Melbourne studio. Chris, great to see you this afternoon. Thanks so much for joining us.
Thanks, Leanne. Nice to be here.
Now, let's just talk about this market today. I mean, we've sort of been seeing it fairly calm and well supported. Dow Jones still at those record highs. We've seen, a pretty good rally over the past two sessions or so. A bit of a breather there today, maybe no surprises. Your thoughts on today's performance?
I couldn't really agree with you more, Leanne. I totally think that it's a bit of a breather today after what has been a fairly exceptional rally over the past 2 days. Somewhat surprising rally from my standpoint. I wasn't expecting it to be quite as strong as it has been. But of course, we are also moving into the Thanksgiving holiday in the US tonight, and it's a half session tomorrow, which is basically, on Friday night, which is basically written off as well. So essentially, global trade is sort of done for the week for the moment, which is not surprising to see why, that initial pop high that we saw on the open has retraced. And I think you were saying in the lead up there that we're now underwater after being ahead a handful of points earlier in the session.
Just on that Thanksgiving holiday there in the US, we've been watching volumes. I mean, they've been pretty poor through the US equity markets there, and it's probably no surprise, as you say, with Thanksgiving coming up. Are we expecting more light volumes for the rest of the week locally here as well?
Look, I would really think so. Without the leads from Wall Street, which really have been driving global markets of late, not just, of course, what happens in the equity markets, but what the greenback has been doing and how that has been impacting commodity markets, for example. Without those leads, I really think activity locally will be very, very subdued for the next 2 days. And again, putting it in context, it takes some of the surprise away from why we have rallied over the past two sessions. It's sort of been the last really good opportunity for the Aussie market, at least, to take advantage of the Trump pump, Trump jump, whatever it is that you want to call it, before we get this circuit breaker in the market. And what I really think that will happen now or after the Thanksgiving Day holiday is that our market, and indeed probably US markets, will trade sideways for a period in anticipation of what the Federal Reserve is going to do on the 13th and 14th of December. The absolute expectation, and indeed my expectation, is that they will absolutely raise rates. I don't think that would come as a shock to anyone out there. But I think, the market will just sort of trade sideways in the lead up to that event, and then post them raising rates on the 13th and the 14th over that FOMC meeting. I think that's the next opportunity for, indeed, US markets and our markets to rally.
Let's take a look from a technical point of view. The ASX 200, it is down about 7.5 points at the moment, 54.76. From a technical perspective, is it starting to look overbought?
Yeah, look, it absolutely is for me. A number of guests in the last hour said the same thing that I'm about to say, and that's that the 5,500 level, of course, being a round number and a psychological point in the market. People are sort of taking profits again on the back of the two-day rally. And again, because of the circuit breaker. So there's a whole confluence of factors as to why it's happening. But indeed, it is looking overbought. The RSI and the stochastic on the ASX 200 are either in overbought territory or are approaching overbought territory. And of course, the 55 to 5,600 region is the cap of the market over the last 12 months. So I think it's going to take, a pretty strong fundamental catalyst for the market to break above that region that it hasn't been able to break above, as I said, for the past 12 months. I mean, I think the only thing on the horizon that might provide that catalyst, as I said, is the Fed finally raising rates in December. If you look at the history of big macro events over the past 12 months, what has generally tended to happen is that there's been volatility, a bit of a sell-off, leading into the events. On the day of the events in particular, like Brexit and Trump winning the US presidential election, there was a lot of violence, some big moves. But then post these events, once the certainty is set in and people know what to feed into their models and what they should be expecting, markets have tended to rally. The market also did this the last time the Fed raised rates in December 2015. Markets rallied post the event. So I think, as I said, that's the opportunity for the Aussie market and indeed US markets, global markets, to press higher from current levels. I don't think anything significant will happen in the lead up to the Fed, but once they do raise rates. Everyone knows what the score is. I think that's the opportunity for the fabled Santa Claus rally, hopefully, to progress.
And as you say, I mean, it really shouldn't come as any surprise for the market seeing them raising in December. 100% chance now is fully priced in. I mean, the market was or had been waiting on a bit more information. It seems like they've now had enough information to sort of convince them. I don't think there's any question about whether they will raise in December. It's going to be all about the outlook, isn't it? How quickly and how aggressively they'll then look to raise interest rates going forward into 2017.
Couldn't agree more. 100% agree. And I think, you know, what the Fed, I think the Fed actually needs to be commended. There's a lot of pundits out there that like to second guess, and I suppose we all do it. It's our jobs. But the Fed has been, I think, as clear as it can possibly be in terms of identifying to the market what it's going to do, what would be required for it to do it, and then them actually going ahead and doing it. I mean, if you read the Fed statements, they've pretty much guaranteed that it will happen in December. Like you say, we all know that. But then post that, I think they're going to be quite circumspect in wanting to raise or suggesting to the market that they will raise too fast. They've already done that once when they came out with the 4 dot plots for this year. And here we are in November leading into December, and we've had none of those interest rate rises. So I don't think they're going to come out post-raising in December and say, well, we envisage that there's going to be 4 in the coming 12 months. They've seen how that movie ends once. I don't think they're likely to do it again. So, yeah, we'll be watching very closely what their outlook will be, but I don't think it's going to be too aggressive, and I don't think it will be anything that will upset markets. I think they've learned that lesson. They're probably very likely to say something. We will continue to rely upon the data to inform our decisions moving forward, and I think that's all you can really hope for at that point of the decision anyway.
Absolutely. All right, Chris, let's bring it back to the local market. And as we were discussing, you know, that recent pop that we've seen over the last 2 sessions or so, how have you been playing these moves? Have you been selling out of some of your positions at those high levels? Are you holding anything at the moment?
I know the cupboard is absolutely bare at the moment. I come from a trading perspective, Leanne. I look after our short-term to medium-term recommendations for our client base, and we were long in the lead up to the election. Now I will sit here hand on heart and say that I didn't think Trump was going to win. I don't think too many people could say that. Yeah. I certainly expected a Clinton win, but in believing that, we were long in the lead up to the election as the market was selling off. And then, of course, we got that bump and we've risen that rise sort of up until the last couple of days when we have sold out of all of our positions. So, like I said, the cupboard is bare for us at the moment. There's certainly stocks that we're watching, but, you know, that market map that I provided before in terms of thinking that for the next couple of weeks, nothing too significant happens from an overall market perspective. You know, we're not in a rush to go out and restock the portfolio at the moment. I think the more prudent thing to do is to wait until closer to the Fed decision. Book that in, bed that down in terms of the rate rise actually coming to fruition, and then look for opportunities post that. Okay,
all right. You mentioned there some of the stocks on your radar. There are a couple that you are watching, and I note that one of those is Whitehaven Coal. At $2.85 it's sitting at. It's down about 2.1% there again today, and we certainly have seen a recent pullback. Do you think the pullback is actually making this stock more attractive? Is it a compelling story in your opinion, given, I guess, the assumptions on coal prices?
Yeah, look, it certainly has become more compelling sub $3. You know, there was a bit of news out recently about the NDRC in China changing the rules for how long or how many days per year Chinese coal mines could stay open. It went from 276 back up to 330, and that's due to some undersupply issues in the Chinese market. Obviously, the government wanting to reopen or push mines to be open more so that they could get that local supply. And that was one of the reasons why we saw, I think it was about a 15 or 20% sell-off in pretty short time in Whitehaven Coal. You know, but some more analysis has come out and suggested that even with those mines open longer, there's still going to be an undersupply, and coal prices, although they have had a meteoric rise, as we all know about, they will remain fairly well supported, and the expectations within what Whitehaven themselves were expecting to get as an average coal price over 12 months, you know, the coal price will still be beyond that. So there's potentially further upside for Whitehaven, and the sell-off recently, as I said, makes it look more attractive. I think sub $3, it's still a pretty good buy. Still like that coal story despite the volatility that we've seen of late.
Okay, excellent. $2.85 there for those viewers watching. Now, Challenger, another one that you're looking at, $10.60 it's trading at. I mean, it's got the whole Australian annuity market, doesn't it? So it's got a pretty big proportion there, I suppose, a bit of a, point of difference. Is this a good business, in your opinion, continuing to perform well? Would you be investing in it?
Yeah, look, absolutely. You took the words right out of my mouth, Leanne. They've got that annuities business all to themselves, really, and as they've managed to prove in recent times, it is a fairly lucrative business. Their share price has really just been consolidating over the past few weeks, just hanging around that sort of 10.50 to 10.70 region. There was a spike a month or so ago, but other than that, it really has just been sort of grinding sideways. But just to absolutely bottom line this one, a really well-run company that has the majority, the whole of a very solid business, generates very, very good revenue, and just, a company that we're happy to own. So this would fall more in the sort of medium-term recommendations that we provide. It's not so much an in and out trade. It's just that we expect a very good business to continue to perform very well.
All right, fantastic. Chris, we're going to leave it there. Really appreciate you joining us. Thank you so much.